Hey everyone, my name is Gus Ugland. Welcome to my channel. I'm really excited to be doing this video because today I'm talking about one of my favorite stocks in the entire stock market. I've been a shareholder for about a year and a half, and ever since I discovered that they were a public company, I've only become more and more interested. And this is Celsius Holdings. As I'm sure many of you know, this is an energy drink company. They own three brands at this point, the flagship brand Celsius, as well as Alani and Rockstar, which they acquired those two brands in 2025. But of course, if you like this content, if you want to see more of this type of content, do what it says in the upper left corner there. Subscribe, like, turn on the notifications, okay? If you want to see more this is going to be sort of a stock pitch, but also kind of just a bull case and an analysis of Celsius as a company and as a stock. So if you want to see more kind of stuff like this, of stocks that I'm interested, stocks that you're interested in, or if you want to just see other, financial market related content, just let me know in the comments and I'll see what I can do. So without further ado, let's get into this because Celsius is a very, very interesting company. So as you can see here, it is a pretty big cut. Like, people kind of forget that Celsius is this big of a company. They take up over 21% of the market share in America as of Q1 2026. And they're the number 3 energy drink portfolio in the US, only behind, of course, Monster and Red Bull. So they're, especially with the acquisition of Alani and Rockstar, they're a really, really big company, and they take up a lot of shelf space in a lot of just a massive amount of the market share, which people really forget about. But let's get into the brands on a more individual level. So looking at Celsius, this is the flagship brand. This is the brand that the entire Celsius Holdings is built off of course. And it's still doing very, very well. Celsius is, it really kind of shook up the market in a big way because there's not much going on the slide here. I'm just gonna talk about the company. So Celsius really broke up the market. Like in the 2000s and the 2010s, for the most part, it was all about Monster and Red Bull and these kind of very male-centered energy drink companies that appeal. They advertised in extreme sports on motorcycles and monster trucks and things like that. And that worked very well for them. It's going to continue to work well for them because Monster and Red Bull, they're kind of in their own lane, and they're going to continue to do very well. But Celsius really just opened up a whole other category because before energy drinks weren't really seen as healthy. Like, they weren't something people were going to be, like healthy people were going to be proudly carrying around and talking to their friends about. Not that it's like secretive to drink Red Bull as an athlete or anything, but that's not really the target audience. Celsius really did a good job at repositioning that and opening up that whole new market of like fitness focused energy drinks. They're low calorie, they have like fruity, kind of fresh, healthy sounding flavors for the most part. They show off like, oh, we have a lot of these vitamins and minerals, and it's the same with Alani. I'll get into that in a sec, but they really shook up the market, and it completely opened up a new category in the energy drink space that Celsius obviously kind of jumped ahead on. But now every company wants to have, a healthy energy drink, a healthy soda, something like that. They really spearheaded that movement that we see continuing to grow. Hold on, I gotta get some water. A lot of talking for me. Now, looking at Alani, oh, I wish I should have put a can up here. As you can see, I mean, this is what the can looks like. This is the pink slush. I think I had it before. It was pretty good. But Alani is essentially, it's a very similar product to Celsius. It's the same caffeine amount, same size, also kind of fitness focus. But the difference with Alani is mostly in their marketing. They market much more to women. As you can see on the screen, like 70% of their market, or their customers, are women aged 18 to 44. So like Gen Z, millennial women. This is completely different. I mean, this is kind of going off of what Celsius started, where like Celsius was gender neutral. A lot of women were drinking Celsius, but a lot of men are drinking it too. Alani is the first, like, it's definitely the biggest energy drink brand that mainly targets women and mainly appeals to women. So they're kind of opening up a whole, they're, kind of, I don't know, expanding upon the audience that Celsius kind of introduced itself into. But Alani is growing like a weed. Alani, we're going to get more into that market share later. We'll see in a couple slides, but Alani is growing like crazy. And this is the really exciting aspect of Celsius Holdings as a stock, as a company, and just with profitability going forward. So anyway, and then Rockstar, I don't want to spend too much time on Rockstar, but Rockstar is kind of, I don't know, Celsius, they purchased Alani in, I think, Q1 of 2025. They purchased Rockstar right after in Q2 of 2025. But Rockstar is a smaller player. They, as you can see, they're putting their logo on a sports car over there, but it's kind of, I mean, they're in the same vein as like a Monster and a Red Bull, same kind of marketing, and they're like Alani in that, 70% men aged 18 to 44, to kind of contrast Alani's 18 to 44, 70% of their customers, 18 to 44, are women. And I'm sorry, 70% of their customers are 18 to 44-year-old women. Sorry. But anyway, Monster, they target that kind of classic energy drink. And, I think Celsius, they're just trying to turn it around and I don't know, diversify their portfolio a bit. But this, Monster, as you can see on this next slide, I mean, it's not a huge player. It probably won't be in the future in the energy drink space. Looking at this market share chart, this is as of 2025. So Celsius was already doing 11% of the market share. Now they're probably already doing closer to 12%, and Alani's probably doing close to 8% by now. So this just kind of gives you a better look of how, Celsius is still leading. Alani is close behind, but then behind Alani, it's barely, there's a huge gap between Alani and Ghost. And then Rockstar is kind of, stuck in the gulag a little bit with Rain Energy and some of these other companies. But Celsius and Alani are just beasts, and together, now that they're under, the same management, the sky is the limit. If I were Monster, I wouldn't be too comfortable. Even if I were Red Bull, Monster, their total market share was 27 something percent, and Celsius is already, with Alani and Rockstar over 20%. So we'll see. Let me go back to the slides. I teased you guys a little bit. This doesn't really paint the picture that well because it only goes to beginning of 2023, but I think I mentioned this earlier. The growth rates Celsius had in 2020 to 2023 were insane. They were doing such fast growth rates, top line. They were exploding into profitability in 2023, and then it came to a halt in 2024. This doesn't really, this just shows market share, and then obviously the market share jumps in Q2 2025 with Alani going through. But I mean, in 2024 and going into 2025, they were falling. They're look at that market share. It's just completely falling. And this was largely due to their integration with Pepsi. So Pepsi has a significant, I think it's a 10% stake in Celsius. But when Celsius was integrating into Pepsi's distribution, which obviously Pepsi has excellent distribution. They distribute all over the world. You want to be in good with, obviously, Pepsi or Coke as a drink company like this to get all over the world and expand internationally. But Celsius, they basically had an issue with Pepsi in product prioritization, and they had a temporary distribution issue that really, it had nothing to do with the demand of Celsius's products, but it had everything to do with just where they were transitionally with Pepsi. However, these are behind us now. This is behind us now. Celsius doesn't really, now they're integrated. Alani's integrated. I believe Rockstar is fully integrated into Pepsi's distribution, which is the best distribution you could ask for. So this is kind of an issue that was behind us, but it's the reason why the stock has been hit so hard, which we'll get into soon. And it's just the reason why this market share really stalled in 2024, and why Alani and Rockstar are catalysts, but also Celsius should recover in line with Alani and Rockstar, kind of somewhere in between there. Anyway, I don't know why I just went full camera. We need to go on to the next slide. So this one kind of shows the same thing, but the real thing I want to zoom in here on here, the real thing I want to zoom in on in here is the international revenue. Monster and Red Bull do 30 to 40% of their revenue from outside of the US and Canada, outside of North America, essentially. Celsius does what is this? 35 million from international and 747 million from North America. Like that ratio, that's like what, 4%, 5%? I don't know. And that just shows how much further TAM essentially they have, total addressable market they have internationally that they haven't tapped into yet. Celsius, we'll get into more of this soon, but Celsius has started to expand into Europe and parts of Australia. However, Alani is like basically not international yet, and I'm sure they're going to have more opportunities to expand Rockstar with Pepsi's integration and just with further, direction from Celsius and investment from Celsius. But moving on, that's just something I wanted to point out. We'll get more into that later, but massive opportunity for them going forward from international spaces. And looking at the stock performance, I just wanted to compare this to Monster because there's going to be, as you can see, slide 10 is kind of about Monster as well, but Monster, they've significantly outperformed Celsius over the past 5 years in stock. And Monster's done well, but it's a legacy player. It's not going to be putting up crazy growth rates. Monster's not going to be putting up crazy growth rates, top or bottom line, for the foreseeable future unless they make big acquisitions or make some major change in, in their company. I don't even know how Monster could get to insane levels of growth rates again, quite frankly, but it's a steady company. They have a lot of cash. I see why they're doing well as a stock. But the thing is, Celsius has done so much more in the past 5 years than Monster when it comes from where they were in 2021 to where they are now in 2026. Celsius, they didn't have Alani, which is this massive brand. They didn't have Rockstar, which is a decent-sized legacy brand. And Celsius was a much, much smaller brand. They weren't doing nearly as much in profit. It just shocks me how little the stock has done in the past 5 years. And this is why I think it's such a good opportunity, because this business has just continued to build, and there's just been so much combination now with Alani and Rockstar and Celsius together now to make this big portfolio. It's not just a brand, it's a portfolio. And that's what I feel like investors don't really understand. It's not just about Celsius anymore. It's about how do we get all of these brands collectively to grow, because you can use one brand's success to help fuel another brand's in that case. So that's just something I feel like people are missing. And I just wanted to point out that discrepancy because it leads to why I think Celsius is undervalued. Sorry, all technical difficulties there. So looking at Celsius versus Monster, especially on a price to sales level too. The thing about Monster is especially on a price to sales level, Celsius isn't putting up huge margins yet. They're not putting up huge net margins yet. It's still in the single digits, should be in the double digits probably next year. But Monster's consistently putting up 20+% net margins. Great drink companies put up 20+% margins long term, like Coca-Cola. They do that too. So a price to sales ratio is basing it on off revenue, but because Celsius is not translating nearly as much of that into profit yet, that's why Monster is able to command a bigger price to sales ratio. However, this is ridiculous in my opinion. Price to sales ratio for Celsius 2.6, for Monster 11.6. That is insane. That's an insane gap to me, especially because Celsius is growing way faster than Monster and has a much better setup to grow much faster than Monster over the next several years. And the market cap discrepancy as well. Considering how much revenue Celsius is doing, over almost 3 billion trailing 12 month, and Monster's not even doing 9 billion for fiscal year 2025. Yet Monster's at almost $100 billion market cap, and Celsius is not even at $8 billion. Celsius is at like a 12th the market cap that Monster's at. So looking at these two, it's comparably, it just looks like Celsius is severely undervalued using these metrics. And going into even more metrics, like comparing it to Monster and Coca-Cola, Monster's forward PE is in the 40s. That's ridiculous. Coca-Cola's is pretty normal. Like Coca-Cola, you'd expect it to probably be in the 20s. 2-year forward PE 21. That's probably pretty fair for Coca-Cola. It's not going to do huge growth rates, but it's a legacy company. It's well respected, and it's going to give you a decent dividend. So but Celsius. I mean, Celsius. What business does Celsius have being at a forward PE of 18? It's a very quickly growing company. They have years of growth and expansion ahead of them, and it's trading at a fraction of the forward PE and the 2-year forward PE of Monster, which is a company doing much less growth, top and bottom line, than Celsius for the next several years. So just going off of that comparably, Celsius looks very, very attractive, and Monster kind of looks overinvested here. Kind of seems like people have priced Monster to perfection here. Just my opinion, but I think a lot of people are going to start to bleed out of Monster and go into Celsius stock over the next several years. Not financial advice, none of this is, but that's just a take I had. I wanted to go on, or I wanted to attach this slide just to look at number 5 here, which is that retail. I'm just going to read it. Retail resets support additional space gains, approximately plus 17% for Celsius, 100% for Alani Nu, and Rockstar net space maintained during assortment reconfiguration. So obviously, they had to do a lot with Alani. Alani's much bigger than and much higher potential, in my opinion, than Rockstar. And Alani was acquired a little bit before Rockstar. So that integration is kind of done, and Rockstar is kind of being focused on fully integrating into Pepsi's ecosystem, Celsius's ecosystem, things like that. But Alani, those 100% shelf space gains, that's insane. That's exactly what you want to see with the drink company. Shelf space is everything. Shelf space is absolutely everything, and just brand power, getting your brand seen everywhere, and building loyalty is everywhere. Is not everywhere. Everything. Being everywhere is everything, pretty much. But I wanted to point that out. And seeing Celsius up 17% is also great. And then the last thing before I get into projections, just some things they've pointed out for growth and expansion for Celsius in 2026. I believe this is just talking about the core brand. I don't think this is specifically talking about like all three. I think this is just for Celsius, but I would imagine Alani and Rockstar are going to be expanded further in the years to come. But anyway, this just shows that they're getting into a lot of Europe. They're getting into obviously Australia, New Zealand. And I've already seen testaments. I've seen, I talked to a lot of investors online, and I've seen people from overseas in Europe, whether traveling or they live there, seeing them for the first time, seeing Celsius in, its own, those gas stations that have, their own fridges, seeing those in the UK for the first time, seeing people in Australia talk about seeing Celsius for the first time. So that's really exciting, and it's just the very beginning. Just the very beginning for international expansion. Remains a huge opportunity for them that people don't really seem to care about, don't really seem to notice. So now getting into my bull case for this company. My bull case is essentially, I'd give this like 15 to 20% odds of happening. And this is kind of like my high end. So I have an 18% CAGR, compound annual growth rate with revenue, which is, it's bullish, but it's fair. This is very much attainable for a company like Celsius. Very much attainable with the growth they're going to have internationally with Alani, and we'll see what they can do with Monster, and we'll see what they can continue to pull off with Celsius. I mean, this is very fair for them. This is a growing category. They should be able to achieve this or close to this. And then for net income, I have, you're going to see for all three, so 2027's net income growth is significantly higher than 2028 through 2030. This is just because they've guided, or analysts, I guess, have guided for a roughly 35% increase in net income in 2027. I think they guided for like 11 or 12% top line for 2027. I think Celsius is gonna crush those numbers. But that significant difference and increase in net income and net margin is just in 2027 because we have I don't know, it's the closest year and we have access to recommendations. But anyway, 40% net income growth in 2027, 23% 28 through 2030. Given this PE low to high of 30 to 40, very fair for a company doing these numbers, especially because Monster trades at a 41 forward PE, and it's not doing these numbers. I could tell you that for free. I don't even have to check. That's not doing these type of numbers. So 30 to 40 is very fair. And what do we get? We get a 42 to 53% CAGR. Give that to me. Give that to me every single day. Now's the time. Well, I shouldn't say that now, I guess. I shouldn't say now's the time to buy. But if this were the case, obviously, it would be a great time to buy. But anyway, what really gets me excited about this one is the 2027 share prices, $66 to $89 next year in 2027. With these estimates, like that's insane considering this is a $29 stock right now. So that's the bull case. I'm gonna go through these two a little quicker just because I've set the tone for where these are. Oh shoot, I'm covering up the years. Oh well, you can assume 2027. These go through 2030. Sorry about that. This is the base case. I have a CAGR on the top line of 14%. Very fair. I think they're going to end up somewhere in the teens. My guess is in the higher teens when it comes to top line CAGR through 2030. And then 35% net income growth for 2027 in line with their expectations. And then 16% after that, 2028 through 2030 for net income. So just growing margins by a little bit, only up to 15% margins by 2030, which, I mean, as I said before, Monster, Coke, great drink companies, most great drink companies get to 20+% margins. And there's no doubt in my mind that Celsius is going to get there eventually. But will they get there by 2030? I don't know. We'll see. Just something to keep in mind. So if they do end up getting to like a 20% net margin by 2030, don't be shocked because a lot of these companies get there. But anyway, at a 25 to 35 PE, we see by 2030 a 29% to 40% CAGR in stock price, which is excellent for a base case. This is excellent. Yeah, and again with this one, 2027, $53 to $75. That we're talking about next year on the low end, $53 a share. That's like a 75% increase from the current stock price. This is a $29 stock. So yeah, looking very good from these estimates so far. And then of course, looking at the bear case, I mean, this one is just, I can't even imagine what would have to happen for them to do these type of numbers. It's just like so far below what I could ever imagine them doing. And this is like you have to remember with Celsius, this is kind of a recession-proof business. Like people don't just stop buying energy drinks when the stock market goes down. If anything, they're going to buy them more. And, these are consumer staples in a much bigger way than like Starbucks is. So just something to remember there. It's a very consistent business in that way. It doesn't really depend on economic swings. But anyway, let's just get into these numbers. Revenue top line, 9% CAGR, very low. That would be not good for Celsius. And then net income growth, 20% for 2027, 9% the other years. No margin improvement after 2027. This would be so bad for them. But I actually kind of gave them some grace on the PEs. I guided 20 to 30, which is pretty solid for a company not even doing double digits, top or bottom line for the most part. But even in this case, 13 to 25% CAGR for 2030. Like significant beating the S&P 500 by a large margin, most likely, in a bear case. And this is what makes me think just like it's very undervalued. There's nothing else to say, especially, yeah, it's very undervalued in my opinion. And that's why, I mean, final slide here, strong buy, spoiler alert, strong buy, under $35 a share. especially right now, $29 a share, definitely buy. I've been building my position out kind of on and off since early 2025, and I'm hopefully able to continue to build it, but I don't think it's going to be long before the story kind of gets out and people understand this is a really big opportunity. So that's kind of my opinions on Celsius. I hope you guys enjoyed the video. I had a lot of fun preparing this. I really enjoy Celsius stock. I enjoy the company. I drank Celsius and I drank Alani. And I think this is a really exciting company. I think it's a great opportunity to invest in and see their growth over the next several years, hopefully several decades. But if you like this video, my name is Gus. Comment below what you want to see from me, what you maybe other stocks you want me to cover, or other, I don't know, financial market related topics you might want me to look into. But it's been a pleasure going through this and just talking about Celsius. So tune in next time, like the video if you enjoyed, and I'll see you all later.